So it's another day that we do the review of the business data analytics. They just concluded August sitting, and we shall be able to tackle and review the part 2 and part 3 of the question. And you'll find that in part 2, the questions that were tested, they tested on the published, they tested on the financial management, and they tested on the management accounting, the break-even point. And for the part 3, where you have to do one question, they tested on the audit schedule, and they tested on employment, taxation of employment income. Yeah, those are the questions that were tested. And if you are new to this channel, kindly consider subscribing. And our September intake is ongoing for the business data analytics. You'll find that all these questions, we had already reviewed them in our block release, we had already reviewed them in our classes, and we believe that our student will be able to perform exemplary well on this particular paper. We'll read through question number 21, which was published financial statement, and we do it together. And the question reads, Paras Limited has prepared the following trial balance for the year ended that 1st March 2025. We have been given this particular trial balance. They are in million of shillings. Additional, the following depreciation rates apply. We have the building, the building is 30 million, so the rate is 5%, and a straight line, and classification is under admin. Plant and equipment 25%, reducing balance. Cost of sales. Meanwhile, land was revalued at 24 on that 1st March 2024. Income tax expense for the year is 78 million, and deferred tax expense, beside that arising from revaluation above, is 20 million. Yeah, so in deferred tax expense, beside that arising from revaluation above, is 20 million. The interest on loan stock is paid semi-annually on 1st April and 1st of October. The investment property had a fair value of 122 million as at 1st March 2022. The suspense account relates to the issue of 2 million new ordinary shares for cash of 120 per share. One share had a par value of 100 shillings. The company has not adjusted for credit loss of 15 million. The expected credit loss on remaining trade receivable is determined from the following probability of default. So this is a selling and distribution cost. The expected credit loss, so we have 260 on 25, and we have the probability of default. So you are required to prepare for publication the statement of profit or loss and other comprehensive income for the year ended that 1st March 2025, statement of changes in equity, and the statement of financial position. So that is our question that we shall tackle, and this is for Farasi. So we shall do our workings here. So Farasi Limited, Farasi Limited, Farasi Limited, statement of profit or loss, and other comprehensive income, comprehensive incomes for the year ended. So for the year ended that 1st March 2025, that 1st March 2025. So that will be our question or our header for this one, and I can bold this, just bold them, and on this end I will do my workings. I will do my workings on that end, that way, and these are in million. They are in million or in thousand, so they are in million. Our values are in million. Yeah, they are in million, but you'll find that the expected is in thousand. Yeah, the expected here, they have written shillings in thousand, but all the others, they are in million. They are in million. So I start with the revenue. Revenue, normally you don't have any adjustment to this. Our revenue, and our revenue, we had a value of that. Then you have the cost of sales. Cost of sales, which you shall do a working for that. Working number 1 for cost of sales, and we start as per trial balance. As per trial balance, the value that we had for this one, we had 94, and again they are in million. Remember that they are in million. What we are putting under these is what? The depreciation of land, which is 25% on reducing balance. 25% on reducing balance, which is classified as a cost of sales. So deep on plant here, deep on plant, and you'll find that the plant, when they talk about reducing, is a cost minus accumulated. So the cost of plant at cost was 372 with an accumulated depreciation of 167, and our percentage of depreciation here, it is being depreciated at 25%, 25%, that way. So that will be our depreciation for the plant, and I'll just carry the values with the decimal. Yeah, I'll carry them the decimal, there will be no problem with that way. So that will be our, it has already rounded it off. Yeah, it is with 0.25. Yeah, let me just carry it with that 2 decimal. Although the values have been rounded off, but still you can carry it with those 2 decimal place. Don't think there was another value here. Yeah, there was no any other value. Just carry it that way. That will be our cost of sales. That will be our cost of sales here. This one, and I'll put a negative sign that way, and we get the gross profit. Our gross profit, and for gross profit, the sum of the 2. Yeah, that way. That will be our gross profit for that case. You can decide to round it off, there will be no problem with that. And then we look whether we had other income. I think I can see investment income, other income here. We had other incomes, and under other income, the first one we have is investment income. Investment income, and our investment income, we had 120 for the investment income. Then we do calculation for the expected credit loss. I think you have seen that expected credit loss. Yeah, remember the beginning we had 58 million. We need to see at the end we had how, yeah, the expected credit loss at the end. I believe here they must have been either an error, this one, because these are expected credit loss. Yeah, the company had not adjusted for credit loss for 15 million, and the expected credit loss on the remaining trade receivable is determined from the following probability of default. So expected credit loss up to 60, 125, and we have the probability of default. So here we shall calculate these. The expected, I'll pick it directly, and I multiply by the probability of default, and I add the other one, 125, by the probability of default of 20%, and I add the other one is 75 by the probability of default of 40%. That way. So you'll find that our expected credit loss now will be 68. It will be 68. So the assumption that I will make, because if either there was an error of these, yeah, they might have been an error of, because all the values are in a million, all the values are in million, they have been stated in million. So there is a unlikely case scenario that this one should be in 1,000. Yeah, that will be my assumption that I will make according to this, because you'll find that here the expected credit loss was 58. Yeah, the expected credit loss was 58, but here now we are getting what? 68. So it is an increase. We shall get an increase in credit loss, an increase in expected credit loss, expected credit loss. So it has increased. So it is an increase of 68 minus 58, whereby it will increase by 10. It will increase by 10. It will be an increase of 10, and an increase, it will be an expense. An increase will be an expense, and so this was the remaining trade receivable is determined from the following probability. So we have been given, and this one will be under the selling and distribution cost. Selling and distribution cost. So here we shall have the total income. Total incomes. Yeah, the only two that we have here, these two, as our total income. Then less expense. Starting with admin, less expenses. Starting with admin expense. Admin. So the administrative expense. Administrative expense. Yeah. Okay, so we continue. So that is it. For the admin, we shall calculate, because for the admin there was the depreciation on building. So admin as a working number 3. Admin expense number 3. Our admin expense as per trial balance. As per trial balance, I use TB. As per trial balance, the admin, we had an admin of 1602. Then we shall include the depreciation. So we shall include the depreciation dip on building. Depreciation on building, and building is on straight line. Yeah, straight line. So 5%. And remember the cost of the building was this 30/30. Yeah, 30/30 by 5%. 30/30 by 5%, which will give you that value. And I think it was the only item that was being included under the administrative expense. Yeah, there was nothing else that was supposed to be included there. That's it. So expected credit loss. No, we had the bad debts. Yeah, the company has not adjusted for the credit loss of 15 million. Yeah, 15 million. The expected credit loss on the remaining trade receivable is determined from the following probability. So, and this is a selling and distribution cost. So that means the credit loss in this case, we shall account for it under the selling and distribution cost. So it means these two, just add it that way. We add it. This is our admin. I'll just minus that. It's an expense. Then we have the distribution, selling and distribution cost, selling and distribution cost. So we do that as a working number 4 for the selling and distribution. So as per the trial balance, as per the TB, let me just use this as per the trial balance. As per the trial balance, the value that we had for selling and distribution was 918, and we shall add the credit loss. Credit loss, remember credit loss is bad debts. Credit loss of 15. We had this credit loss in note number 6 or 15. Don't know whether we had another one. We just need to consider it here. So I did not have any other. It was the only one. Yeah, the credit loss of 15, that way. And we had the expected increase, the one that we have calculated here, increase in credit loss of 10. Yeah, that one will be part of the selling and distribution, part of the selling and distribution cost. Selling and distribution cost. Then we have the finance cost. finance costs, and for the finance cost we shall calculate that as working number 5 for the finance cost. For the finance cost, remember finance is the interest. Finance deals with the interest, and I told the interest on loan is paid semi-annually on 1st April and 1st of October. April and October. And remember our year is ending March. Our year is ending March. So we have to calculate that. So they had paid 8%, 8% loan stock. The interest here, interest on loan stock, interest on loan stock, the interest on loan stock. And remember our loan stock, we had a value of 18, and we multiplied by 8%, multiplied by 8%. So you're supposed to pay 146 as our interest. But when you look at this, we need to know how much we had paid interest. We had paid 64. We had paid 64. Interest paid on the loan stock, 64. Yeah, 64 is what has already been paid. But remember the total is what? 146. 146. So the 8%, the 8% loan stock, that is what we were supposed to have. What we're supposed to have. And therefore, here we shall separate these. What was paid is 64, and therefore the 64 is paid. Accrual, we shall have part of it that is accrued. Accrual, the balance will be accrued. The balance will be accrued. Accrued is 82. We are yet to pay 82 because the percentage is that. So we shall account for the entire, because we use the accrual basis, the 146. That is the 8%. The 8% of the total, that way, and we shall get the profit before tax. So profit before tax, profit before tax here. So profit before tax, that way, that will be our profit before tax. Then we calculate our tax expense for the period. Our tax expense as working number 6 for the tax expense, and we have what we call the corporate tax. I've been told something. Income tax expense for the year is 78. Income tax expense for the year is 78. Yeah, 78. And the deferred tax expense beside that arising from revaluation above is 20 million. So we have deferred, we have income tax expense. They are calling it what? Yeah, income tax expense. Yeah, tax expense. Let me just call it corporate. Corporate tax expense. This is the tax for the year. Tax for that particular year. We are told it was 78. 78. And you have deferred tax. Deferred tax carried forward. You need to calculate that. So we are looking at the deferred tax. So the carried forward, they have given us besides that statement in note number 2, the income tax expense for the year 78 and deferred tax expense beside that arising from revaluation is 20. So we have deferred tax of 20. We shall later calculate this because this is beside that. So 20 does not include that arising from the revaluation. So this was 20. Was 20. And then deferred tax brought forward. Deferred tax brought forward in the statement. Deferred tax we had 40. So we had a decrease in the deferred tax, 20 minus this, a decrease of 20. That's what we shall account for. So that our deferred tax that we shall account in the statement will be that. Will be 58 here as our income, our tax expense. So before that, here let me calculate revaluation. Revaluation number 7. Revaluation of land. Revaluation of land, because land was revalued. So the revalued amount, revalued amount. We need to find the gain or loss. The revalued amount, we are told land was revalued. There was that statement. Land was revalued at 24. Land was revalued at 2400. 2400. That is what land was revalued at. Then the cost of the land was what? So that we get the gain or loss. When you look at the statement, we have land and building. Land and building was 50, 30, and you know 30, 30 was the value of building here. 30, 30 was the value of building. So the remainder will be the value of land, which was 2000. So we shall have a revaluation gain. Evaluation. So we shall have a revaluation gain of the difference between the two. A revaluation gain of 400. Revaluation gain of 400. So we shall have deferred tax. Deferred tax. Deferred tax on that. Deferred tax. Assuming tax rate of 30%. Assuming tax rate of 30%. Assuming the tax rate of 30%. So here we shall take this by 30. I've made an assumption because this one was yet to be calculated. So we shall have a deferred tax of 120 for that. Deferred tax of 120 arising from the revaluation of land. And that is why the statement was and deferred tax expense beside that arising from revaluation above is 20. So this one was 20, but doesn't include the one for revaluation. Doesn't include the one for revaluation. And I think that is all, and that was all. We just need to get the profit for the year. I hope I have considered all the items, all the expenses that have been given. So the restructuring cost is nothing, but I think restructuring either was under the investment or there is nothing that was included under the restructuring cost. So profit for the year. So profit for the year. For the year here, you'll get that value 258 as a profit for the year. Remember, we needed other comprehensive. We shall have other comprehensive income. Comprehensive incomes, other comprehensive incomes, and here we have revaluation. So we have revaluation gain. Let me just write this: revaluation gain on building. Revaluation gain on building. So building was not building per se, but revaluation gain on land. Revaluation gain on land. Revaluation gain on land. Land was revalued at 400. And we have a fair value gain on investment. Fair value. Is it a gain or loss? We are told that the investment property had a fair value of 122. And when you look at here, investment property at fair value, which was 24. Yeah, investment property at fair value was 24, but here the investment property had a fair value of 122 as at that 1st March 2024. 122 as that 1st March 2024. But remember, we are preparing at 2025. 2025. So in 2024 it was 122 at the end. But here the investment property at fair value 24. So these are gain because these one now they have been given at a gain. So the fair value shall have fair value gain on investment property. On investment property. So investment property, they had a lot of gain. The values are not adding up. But what do we say? If here the property had a investment property at fair value, it was 24. But here the investment property had a fair value of 122 million. Remember, all of them are in million. The investment property had a fair value of 122 million, as at that first March. So 122. So the difference will be the gain then. The difference will be the gain of 2278. If that will be the case, then 2278 will be the gain from these. If you are told it was this in that first March 2024, and here we have been given at 2400, then we had a gain. We had a gain of 2278 on the investment property, and we get the total comprehensive income. Total comprehensive incomes here. Our total comprehensive incomes will be that will be our total comprehensive income. Then the second part of it is the statement of changes in equity. And our equity, just need to know, our equity comprises of what and what. We have ordinary share capital, share premium, revaluation, and the retained. We have ordinary shares, share premium, revaluation, or retained first. So the retained profit, revaluation, reserve, and the total. We start with the balance brought down. Ordinary, we had 2000. Share premium, we had 43 for the share premium. Revaluation retained, we had 27, and the revaluation we had 13. And the total, just need to get the total of that. Yeah, that way. Then we had for the year. For the year, we have what we call the retained. Profit for the year. It is this one. Profit for the year, that way. And we have the revaluation, and just put them separately. Revaluation and the fair value gain, I'll put them both there. And I have deferred tax, so we shall eliminate these on land. It will affect the land, the deferred tax. We had the dividend that was paid. Dividend is normally paid out of the retained earnings. The dividend of 100. And what else did we have? The suspense account relates to the issue of 2 million new ordinary share for cash at 120 per share. When you look at the suspense, number 8, suspense account, we have issue of shares, ordinary shares, and share premium. Anything above the par value goes to the premium. Anything above the par value goes to the premium. So we are told that the suspense account relates to the issue of 2 million new ordinary share for cash of 120. One ordinary share is 100. Per value is 100. So 2 million by 100. So 2 by 100 here. 2 by 100. Ordinary is maintained at par, and this one is 2 by 20 because it was issued at 120. So the 20 shillings extra is what goes to what? The 20 shillings extra goes to the share premium. It will go to the share premium, and the total, which will be equivalent to the suspense account, which will be 240. When you look at the value of the suspense, it was 240. So correcting that, so here we have the issue of shares. So issue of shares, or I can just write suspense. I think it will be the best thing. Suspense account. For the suspense, what we issued, ordinary 200 and share premium of 40. So that we correct the suspense. We correct the suspense account. We correct the suspense account. We correct the suspense account. That way, I think that was all that was available. That is all that was available in this question. I think we have covered all for that part. So just get the balance carried forward. Balance carried forward here. Just need to get the total that way, and we add this, and here we shall include the 2. Then here, yeah, that is our statement of changes in equity. The statement of changes in equity. So these are the balance that we shall take to the statement. The balance that we shall take to the statement of financial position, which we are preparing the next. The statement of financial position. So this is for Parasi. So Parasi Limited. So we start with the non-current. Non-current. Non-current asset. And our non-current asset, we shall start with the PPE, parking number 9, PPE. And PPE will comprise of building. The building was 30-30. 30-30. Did we have accumulated for the building? Yes, we had accumulated for the building, 606. And for the year, what we have calculated for the building, building here, we shall get that. Then we had land. Remember, land was revalued. Land was revalued at 24. Then we had planned. We had planned and equipment. Planned and equipment. The cost was 372, and you minus, it had accumulated over 167. And for the year, we have calculated here that way, and you get the total for that. That will be the total for the PPE. The total for the PPE. The total for the PPE. So here we have PPE. That is property, plant and equipment. Property, plant and equipment. And they are in million of shillings. Even these are in million. All my values are in million of shillings. We had the investment property. Investment properties at fair value, which was 24 for the investment property. I think they are the only 2 that we had there. Only 2 that we had. Then we go to current asset. Current assets. For the asset, we had the inventory. Inventory. The one that have been given in trial balance. It was the closing. The one that was in the trial balance was the closing. The one that was in the trial balance. This inventory is the closing. Then we had the receivable. our receivable, and our receivable shall minus the credit loss. Receivable was 933. We shall minus the 15 under the credit. We had this, and we had this, the increase in expected credit loss. So we minus the credit loss of 15 and the expected of 68, which increased. And what else? We had cash. I think I have seen cash, bank and cash. Bank and cash of 119. That way. You get the total for this. That way. And we add the two. Yeah, these are total assets. Total assets. Or total assets. That is our total assets in that case. Then we go to equity and liability. Equity and liabilities. For the equity and liabilities, we just paste what we have in the statement of changes in equity. So we had ordinary shares, share premium, retained, and the revaluation and the total. So for the ordinary, we pick the balance carried forward, the balances that were carried forward, yeah, that way, and their total. So the total is this one, yeah, that way, yeah, that way. Then we go to non-current liability, non-current liabilities, non-current liabilities. And for the non-current liability, we have the loan, the 8% loan stock. It's not the only one. We have the deferred, 8% loan stock, and for the loan stock is 18, and these are the one, the deferred tax. We have the deferred tax is a liability which is non-current, and here we shall account for both. We had the carried forward, okay, where is that? Yeah, it just account for carried forward because the other one has already been accounted for under the revaluation. It has been already been accounted for, so our deferred tax will only be 20. The other one has already been accounted for under the revaluation as a double entry for it, the one for land. Then we have the current liability, liabilities, here we shall start with the payable. Our payables, trade payable, and our payable, we had a value trade payable of 772, and have the accruals for tax. Accruals, we have the tax, current tax, if I can call it that way, corporate tax. Yeah, remember corporate tax was yet to be paid. The corporate under taxation, this one is yet to be paid. And we had what? The interest, loan interest. We had a loan interest that was yet to be paid. The one that we said is an accrual here, 82. 82 was yet to be paid. And I think that was all. Just believe I have covered everything that was supposed to be covered as far as the question is concerned, but we shall see with the balancing of it. Just need to get the total for this one. You get the total. The total equity and liability. Liabilities. Total equity and liabilities. We shall add this plus this plus this. And we find that this is more. This one is more. So this one is adding up to 10, 8, and this one was adding up to 8680. So there's a discrepancy that we need to counter check. A discrepancy of 2158. Let me just counter check. Okay, so we shall revisit. Let me revisit that because we are having a very big difference of 2158. So the only thing that we shall reconsider in our calculation is this. The investment property had a fair value of 122. Remember, already they have accounted for 24. We normally account for anything. We normally say anything in the additional is yet to be accounted for. But if this was the closing balance, it has already been accounted for. So we shall ignore the 122 because this was the opening balance. Yeah, already if the fair value and the end was this, then we should adjust the one in the statement of the trial balance. But already it means they had already taken care of that. So this one we shall eliminate the fair value gain. This one, the fair value gain. I will eliminate even this. The fair value gain on investment property. I will eliminate that because we don't have the opening was in the additional, so we don't consider that because already the closing was already stated at 24. We shall go with the closing. We normally adjust if it is the other way around. The closing was more. If the closing was more, it means correct accounting has yet to be done. But if the closing has already been accounted for in the trial balance, then you don't account for that. And the other thing for the deferred, you'll find that now the difference will be 120. The deferred tax on building, on land, the 120, you shall come and add this 120. The deferred tax, already we have accounted for it under the revaluation, but double entry, it will increase our deferred tax. Our deferred tax, we shall increase it by that 120. Our deferred tax, we shall increase it by the 120. And you'll find that when we do that, it will be able to balance at 8680.25. Yeah, 8680.25, 8680.25. So that's how that question was supposed to be done, at least with 40 minutes. Because mine have taken almost 43 minutes. Within 36 minutes, you can be able to finish without explaining, because I'm taking time in explaining it. So for a student, you can be able to do it within time and get your marks. And remember here, they normally count the entries. Yeah, like for 8 marks, they will count how many entries do we need here. There is 1, 2, 3, 4, 5, 6, 7, 8. So each entry is 1 mark. Each entry here, yeah, each entry was being awarded a mark. For each and every correct entry, you will get 1 mark. So for the statement, they need they are awarding 4 marks. Statement of changes 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. They are 10. At least 8 correct entry, each one at half a mark. 8 correct entry, each one at half a mark. You get your 4 marks. The other one was 8 marks. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So here there were 14 entries. Still they can pick 8 correct entry. If they were awarding 1 mark for each entry, they can take 8 correct entry. Yeah, 8 correct entries, each one 1 mark, and you still get your marks. So that is how. Consider subscribing if you are yet to subscribe to this channel, where we shall be able to review all the questions in August 2025 BDA sitting. So thank you for your time.